This is Unit 2, Week 4, talking about the tax-exempt status of a nonprofit organization. This is the first of 2 videos for this week. The second one will deal with UBIT. The material on this is from the NOLO publication on every nonprofit's tax guide, Chapter 1 and then Chapter 8. So, what is a nonprofit organization? We've talked about this before, but this is spaced repetition. It's very important for you to understand, can a nonprofit organization make a profit? Absolutely. Not only can it, but it should if it wants to be self-sustainable. All income earned by a nonprofit, though, must stay within that organization. It cannot be distributed to any individual or other organization. That is why it is called a nonprofit. Not because it cannot make a profit. It's that the profits of that organization must stay within the organization. It's called inurement, and we'll talk about that again in a few minutes. When the nonprofit is dissolved, the assets, after paying all expenses, must be given to another nonprofit organization. And the control, the watching out of the nonprofits to make sure that they are adhering to the law is the responsibility of states' attorney general in each of the individual states. They monitor and regulate the activities of a nonprofit company. If you have a complaint against a nonprofit that is violating the law, you file a complaint with the attorney general, and the attorney general will then examine that complaint, investigate it, and if necessary, bring action against the nonprofit. The most important aspect of nonprofits in the U.S. is the fact that they are non-taxable. The most common types of nonprofits are 501c3 organizations. They're best known for charitable, educational, religious, and scientific organizations, but there's 27 other categories. You can go to the IRC code, section 501c3, and you'll see all of them listed. Some of the other ones are social welfare organizations like homeowners associations, volunteer firefighters, things like that. Nonprofits do not pay income tax on income related to its purpose, They're also exempt from federal unemployment tax, and they're exempt from most state and local taxes, as well as property taxes. The other thing that is very key to a 501c3 organization is that tax donations are deductible by the donor, so that the donor can take the amount that they donate and reduce their income, thus saving the tax at whatever tax rate they're on that they would otherwise be paying. And that is one of the key factors and one of the major economic benefits to donors, and why it is important for nonprofits to be approved under the 501c3 criteria. There are other 501c organizations that are not tax exempt, but their donations are not deductible by the donor. For example, the 501c4 social organization, which is allowed to do political involvement, but while it is a nonprofit corporation and it does not pay taxes, its donors do not receive a tax deduction. Okay, what are the big three? Charitable, educational, and religious. What is a charitable organization? Well, we all know it's relief of the poor, it's help for the distressed, it's taking care of widows and orphans, and typical charitable needs. But there's other things that fall under that same category: construction and maintenance of public buildings, eliminating prejudice and discrimination, defending human and civil rights by law, and combating juvenile delinquency. These are all activities that fall under the charitable designation under 501c3. Educational, again, is obviously colleges, schools, trade schools, professional schools, but it also includes organizations that conduct public discussions, forums, panels, things that educate the public generally. Museums, zoos, orchestras, even theater groups are considered educational. One thing that surprised me was nonprofit daycare centers. How that's educational, I'm not sure, except maybe it is for the toddlers that are in there. And then youth sports organizations. These all fall under the educational rubric of the 501c3 criteria. And finally, religious. Obviously, churches, synagogues, temples, mosques, and similar organizations. But it also extends to mission organizations, religious speaker organizations, non-denominational ministries, if it's religious in nature, and faith-based social agencies, like the Salvation Army. So those are the classifications of non-profit organizations. But there are also private foundations and public charities. Every 501c3 is classified as either a private foundation or a public charity. The public charities we just talked about, but what is a private foundation? They're subject to much stricter rules and regulations than the public charities because they are controlled by a smaller group of individuals or a small group of corporations or sometimes a single group. Such as the Clinton Foundation and the Ford Foundation. Because these are open to abuse by smaller organizations or smaller individuals with concentrated control, they're examined with greater scrutiny. Okay, how do you obtain a tax-exempt status? Well, you form your corporation in your local state. There are no federal nonprofit corporations. The nonprofit describes the tax benefit. So you have to meet the corporation requirements of every individual state. And then you file with the federal government to get the tax-free tax status. For getting the tax-free status, you submit a written form 1023 or 1023-EZ with the IRS, and they will give you that 501c3 nonprofit status, which is very important for raising funds. Ongoing compliance is important. Revocation of tax exemption is usually tantamount to a death sentence for a nonprofit organization because it will substantially impact the nonprofit's ability. Donors must give back and adjust their income tax returns to eliminate the deduction that they've taken if a nonprofit company loses its tax status. If it loses its tax status, it's seldom at that time. It's usually the previous year or maybe even 2 years while the investigation was being done. So the termination may be retroactive, which means that donors must go back and then refile their tax returns and no longer take credit for the tax deduction that they had if it's no longer an approved 401c3. So losing tax nonprofit status is extremely serious. Limitations on the nonprofit activities that will cause an organization to lose its nonprofit status. 4 things that it may not do. It may not give money or other benefits to insiders or private individuals without receiving a fair return. They can sell things, they can do things with the members and the board members. It has to be open, fair, and disclosed. There cannot be private inurement to individuals. They cannot engage in substantial lobbying. We talked about that last week. They cannot engage in political activity at all. They cannot recommend or endorse a political candidate. And they may not earn excessive income from unrelated business. That's UBIT. We're going to be talking about that on the second video. Private inurement and benefits, very, very important. Siphoning money or other benefits. It doesn't have to be money. It can be assets. It could be services to officers, directors, members, or employees is absolutely verboten. The prohibition is absolute. Any inurement can cause an organization to lose its tax-exempt status. So, if you want to end a nonprofit, you don't just sell the assets. Nonprofits cannot be sold. If the directors decide to dissolve the nonprofit, they must pay off all debts and then transfer all remaining assets to some other tax-exempt organization. This is done voluntarily by the board, or it may be done by a state attorney general. So in conclusion, in the U.S., Nonprofit tax benefits are the lifeblood of a nonprofit organization. The consequences of losing the nonprofit status are catastrophic. Don't go anywhere near that line. Okay, the next video will be talking about UBIT.